Good morning, everyone. Trust we are doing good. Yeah, welcome to another session with me. I'm your host, Akinwale Chibuike, and today we'll be talking about trading with indicators. Okay, but before we begin, let's do a quick check. If you can hear me, do drop a yes in the chat box, and if you can't, do drop a no in the chat box. Okay, so please do make reference all your questions to the question section, and I'll drop polls regularly, so let's do what to respond to the post in the post section. So if you can hear me, drop something in the chat box. Yes, no. That's if you can hear me. Please drop something in the chat box. So let's start off with a poll. Okay, let's start off with a poll. Um, no poll. So I'm sending in a poll, and the poll goes thus: do you have a trading account with EGM? Yes or no? Okay. Do you have a trading account with EGM? Yes or no? It's in the poll section. So please let's do well to respond to it. We've got 13 people on the call. That's quite good. That's a good number. But we need more persons on the call. Okay. So if we've got 13 on the call, I expect to get 13 responses on my polls. So please let's do what to respond to the polls. I've got just 5 persons responding to the polls. Let's do what to respond to the polls. Okay. So do you have a trading account with AGM? Yes or no? Let's do what to respond to that poll before we begin. Okay, we've got 6 persons responding to the poll, and we are 15 on the call. That's brilliant. That's brilliant. So like I said, we'll do a quick check. If you can hear me, please say yes on the chat box, and if you can't, please say no, so I could actually confirm if it's from my end or from your end. Okay. It's okay. We got something in the chat box. We've got something in the chat box. Okay. Yes, that's brilliant. Yes, yes, yes. Okay. So, like I said, we've got questions in the polls. Let's do what to respond to the question in the polls. Do you have a trading account with EGM? Yes or no? We've got just 7 responses, and we are 16 on the call. So yes, please let's respond to the polls. Thank you. Okay, brilliant, brilliant. I tried as much as possible to reach out to everybody. I called everybody, like not everybody, but I called a few persons. And yeah, thanks for reaching out, picking up my calls and responding. And you are on here. Thank you very much. And also to those I sent messages to on WhatsApp, and they responded to it. Thank you very much. Okay, so before we dive right into the class, because I'm just getting 7 responses on the poll. Okay, 8 now, and we are 17 in the class or in the webinar. Um, I'll do well to take everybody through how to open a trading account with Eagle Global Markets. That's if you don't have a trading account. I'll take you through on how to open a trading account with Eagle Global Markets. So, without wasting time, let's dive right into it. I'll be sharing my screen, so we've got nothing to worry about. You see everything on my screen. Okay, you see everything on my screen. Let's just share application window. Let's share. See if I can get a new tab running. Okay, so yes, we've got a new tab. Sharing the new tab. Ifunaya, it's great to have you on the webinar. It's great you've been attending my sessions. It's great to have you on the webinar. Deepo, I'm very, very sorry about that. Please confirm if my audio is clear now. Confirm if my audio is proper and you can hear me, and confirm if the background noise is no longer there. Okay. Please confirm that. Okay. Confirm if my audio is clear now, and also confirm if the background noise is no longer there, because from me here, like from my perspective here, there's no background noise, so I really don't know where that one is coming from. Okay, so please confirm if my audio is better now, and audio is still poor. My audio is still poor. Wow. So what about now? What about now? Is my audio still better or is it still poor? Is the audio better or still poor? Deepak, please confirm that. Is the audio better or still poor? Because everybody's saying the audio is good from their side. So I'm thinking it's from your side. Do you mind getting a headphone? Do you mind getting a headphone to use for the class? Okay. Because everybody's confirming that the audio is good. Everybody's confirming the audio is good, and you're confirming it's not good at your end. But because of that, I won't use the earpiece. I'll use um, just the audio from my PC so you can hear me now. Olusegun, the audio, no audio should be from your own end. Try to connect with your audio, okay? Try to connect with your audio. So let's dive into how to open a trading account with Eagle Global Markets. Very, very simple. All you need to do is go to your browser, any browser of your choice or any browser you're using, and type in Eagle Global Markets. You can see Google already popped up the idea that what you want to search for is Eagle Global Market, but it's best we type it in full. So Eagle Global Markets. When you click on it, it takes you to everything about Eagle Global Markets. That you're coming through from Google, so it shows our Twitter page, it shows our Facebook page, it shows our LinkedIn page. It shows you how to download our app from Play Store. All you need to do is click on the first link right here, this one right here. So Eagle Global Markets, and you click on that link, it takes you to our website. Okay, it takes you to our website, and when it takes you to our website, you see we have the home button, the about, the range of markets, platforms, EGM analytics, education, partnership, contact. Okay. First off, you might want to check out the platform, so you can click on one-click demo, and it shows you our demo. Okay. It shows you just a demo account. This is a dummy account for practice, and it shows you that. So let's wait for it to load, and it loads. Okay, so let's just wait for it to load. While it's loading, let's just wait. Okay, so it's loading. Can we all see it clearly now? Can we all see the demo clearly? Okay, brilliant. Now this is what a demo account looks like. The same structure the demo account is, that's the same structure the live account is. Okay, so there's no difference with the interface and all. It's still the same thing. So that's why we made it this way, to get everybody familiar with the platform. So we can all go back to the home screen and click on open live. Okay, when you click on open live up above here, you see the login, one click demo, open live, open demo. So I already have my account logged in here, so I can just log out. And yeah, let's say don't have an account. So this is where it brings you to. Then click on don't have an account, and it takes you to this page right here. You input your first name, your last name, your username that you would love to use on our platform, and you put in your email. After that, you put in your password, your preferred password, then your phone number, your personal details such as date of birth, your country, your address, your city or town. So let's just put in something random here. A, B, C, D at gmail.com, or just at mail.com. Okay. Then we put in just 1, 2, 3, 4, 5, 6, 7, 8, 9, 0 for that. Then we just put in 7, 1, 2, 3, 4, 5, 6, 7. Okay. Okay, great. So we scroll down a bit and we just put in random date of birth. Okay, I can just do this. Then address line 23, London, Nigeria. Let's just put it that way. City or town, you could just do Ikoyi. Next. Okay, the password must be okay. That way, I think it's better that way. So yes, okay, it still doesn't want to allow me. Okay, so let's see if it works now. Okay, so my username must have 3 letters. Okay, CBT. Let's just do CBT. Okay. Next. So I believe it should load us to another page, and this is the other page where shares, you just click on sometimes. So if you're signing up and you have no knowledge about this, there's no need for you to click on no. Okay, just click on sometimes. Okay, just click on sometimes so that you don't have to reapply again. Okay, you just click on sometimes so you don't have to reapply again. So when you click on sometimes, you just, have you had an experience? You could just put no other relevant experience, or you just put attended a relevant training course. Then financial details, you fill in everything right here. Then you just click on finish. Then you receive an email in your email, and from there an account manager contacts you from our office and puts you right on track. The next process, which is join my webinars and learn how to trade the financial markets. And if you're too busy to join my webinars or learn how to trade the financial markets, we've got the perfect product for you, which is the product is copy trade, where we give you access to thousands of profitable traders that when they make profits and they place trades, the same trade automatically places on your own account and you make profits. So you can see how easy and seamless we've made the process. So yes, you can now go ahead and open a trading account. I'll drop the link once again in the chat box. So go ahead and open a trading account with us. So in our last class, let's take a dive back into the past. In our last class, we talked about what? Technical analysis. Like, we've been talking about technical analysis in detail for about a week or two now. We've been talking about technical analysis in detail, and I've gotten a lot of would I say testimonies of results? Yes, results from persons that have been applying everything we've been learning so far, catching a huge amount of points in the financial markets, making a lot of money applying those things we learned. So last week we talked about channels and trend lines. We said trend lines act as dynamic support and resistance, while channels act as dynamic support and resistance all together, and shows you the path in which price is trading to. Also, we talked about breakouts, and also we talked about fake breakouts, which I explained both of them to everybody. Okay, so in today's class we'll be talking about indicators. Okay, indicators, and indicators are tools in the financial markets that helps us navigate the market properly and make a lot of money from the financial markets. Okay, so don't ignore everything we've learned in the past. You can still apply every knowledge together to make more profits from the financial market. So let me share my screen. Now. You would see the slide for today's class. So I've done well not to make the slide too big or too bogus, so we can have something to work with, something simple and direct. Okay, so trading with indicators. Now, trading with indicators is very easy, but most people make it difficult. And before we begin, this is what you learn in this session. In this session, you learn about moving averages, RSI, and combining both of them. Okay, you learn about combining moving averages, RSI together. Okay, so if you've done well to open your account, drop something in the chat box, drop an emoji in the chat box. Okay, if you've done well to open your account, drop an emoji in the chat box. Okay, just drop an emoji in the chat box. If you've opened a trading account with us, drop an emoji in the chat box. Okay, just drop an emoji in the chat box. Thank you. So before we go to what we will really learn in this session, let me give you guys a breakthrough of what indicators are. So using life examples like I always do, and I will continue to do that. What are indicators? Now, take for instance, you're driving your car and you want to make a left turn. What happens to your backlight? Can anybody give me an idea on what happens to the backlight or the tail light at the back of your car? What happens to the backlight? You want to take a left turn. What happens to the backlight? Anybody at all? Okay, I'm getting responses. Tulu is typing something in the chat box. What happens to the backlight? What happens to the backlight? Well, a lot of people are giving the backlight. Okay, the backlight glows. That's the indicator blinks. Okay, the backlight glows, the indicator blinks to the left hand side because you're making a turn to the left hand side. Now, simple logic, that is what indicators in the financial markets are, but they work in a very similar format the way the pointer, okay, at the back of your car works. Now remember, if you're going down the road and you want to take a left turn, your pointer trafficates to the left-hand side, telling other cars at the back that, okay, you are turning left, they should avoid the left-hand side for you to pass, right? Yes or no, okay? Yes or no. I'm trying to make this as simple as it can, okay? Explaining to make every 5-year-old understand. Great. Now, when you point, when you turn your car and it points to the left, it's telling other people that you're turning to the left, so they should avoid the left and let you pass through the left. Now, when we talk about indicators in the financial market, indicators give us heads up on where price is likely to head to. Okay, indicators give us heads up on where price is likely to head to. They act as guidance or confluence for we traders in the financial market. It's fine to see price going up. What if an indicator confirms that price will continue going up? How does that sound? That sounds amazing, because you already know that you are on the right path of the financial market. You're on the right track. You're on the right trend in the financial market. Am I making sense? Am I making sense? If you've got any questions so far from what I've been saying, drop them in the chat box. Drop them in the question section. Sorry, drop them in the question section if you have any questions at all about all the things I've been saying. Now, let's take another example. If your pointer at the back of the car is faulty, will it show the sign that it wants to turn immediately? Will it show the sign that you want to turn to the left-hand side immediately? It won't immediately, right? But in the end, it will show. But that might be after you've turned, right? Good. So, back to trading with indicators. Trading with indicators is relatively the same I've been explaining using the car and the pointer and the turning aspect of driving, okay? What indicator tells you is further confluence to buy or sell or to stay in the financial market at a certain period of time. Let's go to the next slide. There are two types of indicators. We have the leading indicator and the lagging indicator. Before we come to what moving averages are, RSI are, and how to combine both of them, we have the leading indicator and what's the lagging indicator. Now, when we talk about the leading indicator, the leading indicators are indicators that react faster to price. Okay, the leading indicators are indicators that react faster to price. Okay, do we understand that? Indicators that react faster to price are leading indicators. Lagging indicators are indicators that lag behind price. That means price would have done what it wants to do before they give you signal that price wants to do that thing. Okay, do we all understand that? Do we all understand that? I'd love more responses. Do we all understand that? If we do drop something in the chat box, we've got 24 people on here. The chat box should be Now, in your own way, or from your own perspective, tell me what you think leading indicators are and lagging indicators are. Okay, I'll just take like 3 or 2 persons. Tell me what they think it is. Okay, I'm waiting. Okay, I'm still on the call. I'm waiting. I can see a few persons typing. In your own word, what you believe. Okay. Yes, kinda, you have a good thought about it, but I will break it down to you after I get other responses. So Kelechi says leading indicator reacts to price action faster than lagging indicators. Simple, very, very simple. Now, I've got 2 responses, and let's dive right into it. Now, someone said leading indicator points at the market going up. No, leading indicators can point to the market going up and it can point to the market coming down. Okay. What leading indicators are is they react to price and its action, price action, faster than indicators. The lagging indicators are slow to react to price. They don't react to price fast. They react to price slowly. Okay. Do we understand now? Leading indicators react to price action, price and its action faster than lagging indicators. Lagging indicators react slowly. Price might have done that move or give away that move before they tell you that, okay, that's what price is going to do. Do we understand? Do we understand now? If you do understand, drop something in the chat box. Morning also to you, Moses. So, back to what we were saying. Now, these indicators can help you analyze potential trade opportunities. They can help you analyze potential trade opportunities. They can help you understand fully the weakness and the strength of price. Also, don't forget that these tools also have their own weakness and strength. Now, like I said, we have 2 types of indicator, leading and lagging. And we said leading reacts to price action faster. So leading indicators give you signal before the signal plays out. It gives you signal before that thing happens. Okay. And we said lagging gives a signal after that thing has happened. Okay. So the thing might have happened but not fully happened. Like you are running down to let's say Ikoyi. You're running down to Ikoyi, and before you start running, I already know you want to run down to Ikoyi. That's a leading indicator. You started running, you've gotten to Third Mainland Bridge. That is when I know that you started running. That's a lagging indicator because you've gone far already. You've gone further already before I knew that you want to start running. So do we understand using that example again, using that life example again? Do we understand? Do we understand using that life example again? I'm trying to make everybody understand this concept. Good. Now, leading indicators work in form of overbought and oversold. They measure how price is when it comes to overbought and oversold. They measure how price is when it comes to being overbought and being oversold. When we say price is overbought, that means a lot of people has been buying that financial instrument. And when we buy something too much, what happens to it? It becomes scarce, right, in the market. Abi, it becomes scarce in the market, right? Then what happens later? The price dumps, right? That means the instrument or the asset needs to come down to a cheaper price before we all are able to buy. So when price is overbought, we look for price to come down further for us to buy cheaper. And that is what leading indicators are. They give you a signal to look for an opportunity even before price was overbought or oversold. They just let you know that price is overbought. Expect tendencies of price coming down further for you to buy cheaper. They give you signal that price is oversold. Expect tendency for price to go down further before you start looking for buying opportunities. Do we all understand that? Do we all understand that? If we do, drop something in the chat box. Okay, somebody said he doesn't understand. Okay, Ugochukwu, let me use this example. You go to a supermarket today. And someone tells you to buy a Lego superstar toy for your child. Then all of a sudden you go to the supermarket and everybody was at the Lego superstar toy store. Okay, everybody was there. Everybody has been buying the toy. Then you were able to buy one. Other people were not able to buy one. There was nothing again left. Remember, the toy is already what? Overbought. A lot of people has bought the toy. What needs to happen for new people to buy the toy? They need to produce another set of those toys, right? They need to produce another set of those toys. What happens when they produce another set of those toys? Price comes down. The price they sold before will come down because people want to buy cheaper. And that's the concept of price being overbought. Okay? So leading indicators give you opportunity to sell when price is what? Overbought, and give you opportunity to buy when price is oversold. So when people bought and there's no more toy, you'll be looking for who to sell for you, right? Who to sell to you, right? That means if somebody bought it $100 and the person tells you, okay, you want to buy it for your kid, I'll sell it for you $120. $120. You buy it at that price, right? Because of your kid wants that toy and also you can afford it. Everybody starts selling the toy at $120. What happens? The toy value drops because everybody's selling high. Then it comes down to $50. Everybody buys the toy again and expect the price to go up so they can sell at the more expensive price. Do you understand now? If it's a question you're typing, please drop the question in the question section. Thank you. So that is what leading indicators do. Now, the leading indicator in this section that you will learn is RSI, because it is the most common leading indicator that I know, or that every trader knows. Okay, it is the most common leading indicator that every trader knows. So we're talking about RSI in detail. Okay, in detail, we're talking about RSI in detail. Now, do we all understand that? Okay, good. So when we talk about lagging indicators, we said lagging indicators are indicators that give off the signal after the signal has started or after it has started playing out. And I explained using the concept of someone running. You want to run down to Ikoyi. I already know before you start running. Okay, I already know before you started running. You got to Third Mainland Bridge. That was when a friend of yours knew that you started running. In this instance, me knowing at first, I am the leading indicator. Your friend knowing secondly, because of you've gotten to Third Mainland Bridge, which is almost halfway of the road, is the lagging indicator, because he knew the signal after you've started, not before you started. Do you understand now? So the The lagging indicator in this scenario is the moving averages, okay? Is the moving averages. Now, let's dive right into moving average and lagging indicators. But before we dive right into them, ask your questions. Ask your questions in the questions section, okay? Now, Dennis said in a trending market, the oversold or overbought indicator gets stuck in either overbought or oversold level, which made it difficult to use. How can you deal with this? I really don't understand your question, Dennis, but let me just try as much as possible to digest it. Okay, again, one more time. In a trending market, the oversold or overbought indicator gets stopped, okay, in either the overbought or oversold level, which made it difficult to use. How can we deal with this? Now, first off, when a momentum indicator, which is the RSI, and it's a leading indicator, it doesn't get stuck at the overbought or oversold level. It can stay there for a while because of price has not started dropping. But be cautious, it never gets stuck at that level. Okay? Now, all you need to do is to place the indicator on your chart, wait for price or the indicator to tell you that price is overbought, and wait to see price start coming down. That means it's already giving you a heads up that okay, they've bought this asset too much and it needs to come down. Okay, it needs to come down to buy cheaper. All you need to do is to wait to see price give you a signal that it has been coming down before you start selling. Then you take the opposite also for an oversold. You need to see them sell off this asset to the oversold region, which you now have a heads up that they've sold this asset too much. We need to start looking for buying opportunities. Then you look for buying signals on the chart. Do you understand now, Dennis? So has anybody got further questions? If you've got questions, please do drop it in the chat box, okay? So I'm sending in a poll before we move to the next thing. If you've not responded to my previous poll, please check it out and respond to it. Thank you. I just sent in a poll now, which is, will you be trading after the webinar? Yes, no, maybe. Let's do well to respond to it, okay? So I'm still waiting for responses. Okay, I'm still on the call. I want to send in a new poll, but do well to respond to the previous poll. Will you be trading after this webinar? Yes, no, maybe. Okay, drop your response. Okay, so I sent in a new poll just now, and I'd love everybody to respond to it. What do you trade the most on our platform? Is it Forex, commodities, stocks, or CFDs? Okay. What do you trade the most on our platform? Now, the thing is, most times, Kelechi asked, most times, fundamental analysis goes against the indicators. How can we manage this? Now, for you to manage this, you need to be in alignment with the market. When I say in alignment with the market, you need to understand what has happened in the market previously and the tendencies of what will happen in the market. Okay. So now, for instance, you've noticed that anytime they release NFT, any signal that the RSI gives always fail. Will you trade during NFP when using RSI? The answer is no. So you need to understand what has happened previously when such news release was made based on and how an indicator reacted to it. You need to understand that before you place a trade. Okay. Now, to manage this, you need to just put into consideration the type of economic events that is going to be released. Okay, you need to put into consideration what type of economic event that is going to be released. You need to put into consideration every single time before you trade or before you place a trade. Okay, so I hope that is clear, Kelechi. We've got a few things in the chat box. Okay, great. Now let's go to what moving averages are. I'll be opening the trading platform, our cloud trade platform. Just a minute, let me log in. Okay, so now I'm logging in at the moment. Okay, a minute. Um, Still on the call. Okay, so can you see my screen now? Can you see my screen? If you can see my screen, please say something. Can you see my screen? Indices are CFDs, okay? They're relative. That's why I used CFDs there. My PC is hanging. I want to log in into another place now. Okay, can we all hear me now? I'm sorry, I don't know what went wrong with my audio, but can we all hear me now? Okay, brilliant. So I logged in already and I mistakenly logged out. So let me log in back so we can see the moving averages, how they work, and explain a few insight thing I know about how to appropriately use the moving average tool, then also the RSI. Okay, so in a minute. Okay, I'm sharing my screen already. Sharing. So can we all see my screen? It's actually white. It's still loading. Okay, we can all see my screen now, right? And how it's still loading, right? Okay, great. So let's go to the charts. Let's check USD Okay, USD Let's go. So let me stop sharing this and share the USD chart. Share screen, share USD. So can we all see the USD chart now? Using indicators, using pure price action, anyone could be easy for any beginner. It all depends on how well they are able to grasp these things. Okay, it all depends on how well they are able to grasp these things that are being taught. Okay, so that's just it. Like, that's the simple truth there. If you're able to grasp indicators better than price action, use indicators. Don't let anybody tell you one is better than one. No, none is better than none. It just depends on how well you know how to apply them. Okay, so studies. To access the moving average on our cloud trade platform, you click on studies, then you scroll down and look for moving average. Okay, you look for moving average. Now, this is moving average right here. You click on it, then it comes on your screen immediately. So I'll be using the 200 moving average, which is the most popular. Now, you see a dialog box. You can change the period of your moving average. You can change the field to either close, open. Should it calculate the moving average based on close, open, high, or low? I just leave it at close because I'm not really a mathematician, in that instance. So I just leave it at close, because the moving average value is derived from calculating previous price based on the value you put in here. So if you put in 200, they are calculating previous price action on 200 previous candles. Okay, so let's just click on done. I'll be leaving it as the simple moving average. I'll use the simple moving average to explain something to you guys. Okay, so done. Now look at the moving average. Yeah, let's look at the moving average. Yeah, okay. Okay, let's look at the moving average. Yeah, I'm trying to zoom out properly. So previous 200 candles, previous 200 candles. Now let's look here. Let's look here. Now look at this moving average, this red line. Where did the uptrend start from? The uptrend started from here, right? Like, let's say this was the last previous structure that was broken. Let me mark that out. Let me mark that out, okay? Let me mark out the previous structure that was broken. This was the last structure that was broken, right? Yes or no? That little box I drew there, that was the last previous structure that was broken, right? Now, look at where the moving average said the uptrend just began. Whereas you could have bought somewhere around here and made a lot of money. Did you see how it lagged behind price? Did you notice it? Or can you see it clearly how it is lagging? Price has already done its thing already. It hasn't completed the thing it wants to do, but it has done a huge part of it. Then the indicator is now telling you, the moving average, which is a lagging indicator in this instance, is now telling you that now is the time to start looking for buys. You can use the lagging indicator if you want to become a conservative trader, okay? But you can use an aggressive indicator, which is the leading indicator, if you want to become an aggressive trader. Do we now understand the concept behind lagging indicators now from the moving average perspective? Do we understand the concept behind it now? I'll still show you more examples just from this instance. Do you understand the concept of lagging indicators just from what was explained here? Okay, brilliant. Now let's check here. Look at this right here. Price has already started falling because it broke previous structure, which was here, right? That was previous structure. It broke previous structure. So I knew I was in a downtrend from here. But look at where the moving average told me the downtrend just began. Fine, if I had taken a trade after the moving average, I would have made money. But why couldn't I enter here and make a lot of money? Do you see how you're not seeing my cursor? This is it right here. Can you see it now? Can you see it now? Please confirm if you can see it, okay? Can you see it now? Great, you can see it. That's good. So did you see how price fell first and the downtrend started before the moving average told you the downtrend had started? Now look here, it told you the uptrend has started, whereas the uptrend had already started here. And if you are starting looking for buys here, you'd have lost money, a lot of money. You would have lost money. Now that is the part or the aspect of the what? Try exiting the meeting and joining again. That should do the trick. Now, do you now see how clear a lagging indicator lags in the financial market? Now, let me change this from 200 moving average to 200 exponential moving average. Let's see the difference, okay? Let's see the difference. Now, let me put it back at 200 simple moving average first. Note, this was where it said the uptrend began. Okay, now let's switch it to a 200 exponential moving average. Is there any major difference between the simple and the exponential, where they said the uptrend began? Is there any major difference? Any major difference? Any major difference? I'll do it again. I'll do it again, okay? Because I'm seeing a lot of people saying yes, 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 yes. Let's do it again. So let's take it back to simple. This is where the simple said the option started. So let me just get these two ready. Just let me put it somewhere around there. Okay. Now let's see if there is a major. I said major, not just a regular change. Okay. Now see, is there a major change where the simple and the exponential told you the uptrend just began? There is no major change at all. It's the same thing, like relatively the same thing. No major change at all because it's still at the same level. You can see price consolidated, came back for a reset before pushing away. Still the same thing from the simple and the exponential. Even though they say exponential moves faster than simple, they all still react the same way to price. Do we now understand the concept of lagging indicators? Now, in a nutshell, lagging indicators are those indicators that tell you the direction of trend. Okay, lagging indicators are those indicators that tell you the direction of trend. Do we understand now? Do we understand now? Lagging indicators tell you the direction of trend, but they are slow because price needs to already be in that trend before they can tell you the direction of trend. Do we understand now? Brilliant. Brilliant. Have you got any questions at all? Any questions before I proceed? If you've got any questions, drop it in the chat, in the question section, okay? Drop it in the question section if you've got any question at all. Wow, everybody trades Forex. Few trades commodity, just one person trades commodity. Wow. That's amazing. I trade Forex majorly, then I trade CFDs or indices once a while. I'm not really a fan of much volatility in the market. I decide to stick with my Forex, the currency pairs to be precise. So if you've opened your account, like I said, please do drop something in the chat box if you've opened a trading account as we did before beginning. Now, the best points to use a moving average is when you combine moving averages with support and resistance. Okay, support, and you combine it to support and resistance. Let me show you something real quick. Look at this. Let's say this moving average was not there, but just look at this. This acted as resistance. Let's zoom in and see it properly. Let's see if we can get a brush through. No brush through. Okay, seems we have a dodo right. Look at this. This acted as resistance, broke, acted as support, acted as support, acted as resistance but failed, acted as resistance, acted as support, acted as support, acted as support. Now look at this area where price was acting as support and resistance every single time. Look at it. What is it telling you? It is telling you that that area is already weak and something is about to happen. Now look at the moving average also. Price never traded majorly away from it. Price was always coming into it. What is that telling me? That's telling me that price has a huge tendency of breaking. Then what happens? Look at how it broke. Now let's come and major on this right here. Look at how we broke previous structure and we came back for a break and a retest. Then what happened? We went all the way down in price. See how we went all the way down in price. Do you see clearly now, Richard? Do you understand now, Richard? I should use a thick line. I don't know how to make the line thicker, but let's see if I can make the line thicker. Okay, let's just use there's a tool here we can use. The trend line tool. So this is how price went all the way down. Can you see how price went all the way down? Let me make that thicker. Now, do you see how price went all the way down? You see how price went all the way down. Okay, for my simple moving average. Okay, let me make the line thicker. No, I can't make the line thicker. I'm sorry. That's how it's been programmed on here. I can't make the line thicker. So you just have to, like, let's just dive right into it. If you want me to point out something, just say it. I'll point it out for you. So now, do we understand the concept of how lagging indicators work in the financial markets? Do we understand the concept now? Okay, great. Yes, moving averages act as dynamic support and resistance, but depends on the period the moving averages. Okay, it depends on the period the moving averages. Depends on the period the moving averages. So let's go to our leading indicator. Now, I will leave the moving average. Now, let me tell you the trick I told you guys I wanted to tell you about moving averages. Now, I don't use the simple moving average alone. I don't use the exponential moving average alone. I use both of them together. Okay, I use both of them. So I use the moving averages I use are the moving averages I use are, let me confirm that. Wow, I don't have it on here. Okay. Okay, I use the 18 exponential moving average and the 8 exponential, and the 8 moving simple moving average. Okay, the 18 exponential and the 8 simple moving average. You will see how it acted as every single time, acting as dynamic support and resistance. If you look at it closely, let's delete all of this. Let's delete all of this. Now look at it closely. Do you see how it's acting as dynamic support and resistance? So those are the two I use always on my charts together. If you noticed on the chart I showed you guys, which was the one we used in our last class, you'd see that there were two moving averages, which was the 18 and the 8. So let's add one more, which is the 8. Make it color blue. Great. So that is, or those are the moving averages I use, 18 and 8. One is exponential and one is simple. So let's go down to the leading indicator, which is the RSI, the relative strength index. So you come back to where we found our indicators the other time. So we look for RSI. So this is the RSI. We click on it, and here we have it. Now, look at this closely on the RSI, okay? On the RSI, I want you to look at this closely. Let's see if I can edit the settings, okay? I love to use the 70 and the 30 oversold and overbought region, okay? The 70 and 30 oversold and overbought region. That's what I like to use, the 70 and 30 oversold and overbought region. That's what I like to use, because I know the 18 is the exponential, the 8 is the simple. Okay, the 18 is the exponential, the 8 is the simple. Now back to the RSI. Back to the RSI, which is a leading indicator. Now look at this closely right here. Let's look at this closely. Let's take it from here. Now let me get a tool called the vertical tool. Let's find it. Come in, let's find the vertical line tool. Okay, so found it. marking out a few things so you guys can see these things, how they happen on the chart. So let me just mark them out. Okay, that's enough. That's enough. Let's see if I can mark out a few more, just a few more. Okay. Okay, yeah, so that is good enough for what I'll be explaining. So I want everybody to pay close attention. Let me see if I can reduce this. Let's see if I can reduce this to something more light. So I'm trying to reduce it to something we can all relate with. Okay, so I hope you all can see the lines I'm drawing on my chart, right? We can all see the lines I'm putting on my chart. If we can, please drop something in the chat box. Thank you. If we can see those lines I'm putting on my chart, please let's do what to let me know. So I'll just reduce it, and yes, let's explain the RSI now as a leading indicator. Now I want everybody to pay close attention, close attention, close attention. Now look at this area right here. Let's just move this to the side. Price was what? Overbought. Went from an oversold region, this area right here. Let me get the doodle. Look at this area right here. It went from an oversold region to what? An overbought region. Okay? So look at it closely. This was where the overbought happened. That's giving you a what? A heads up that price is going to what? Sell. And what happened immediately after that? Price what? Sold. Then we got into a what? An oversold region right here. Trying to draw the got into an oversold region. Then what happened? We had this M pattern formation right here. Then what happened? Went all the way up to overbought. You see how easy it is these patterns are to identify. You see how easy these patterns are to identify on the chart. Just simple overbought and oversold. You could have made a lot of money off this. You could have held this trade for days and made a lot of money. Held this one for days, made a lot of money. Held this one for days, made a lot of money. These patterns work in the financial market. They work perfectly. They work perfectly in the financial market. They work perfectly. And you can see also yourself that when it got oversold, what happened? Right here, it sold off. What happened? We got into oversold. We bought. We went all the way up. Now look at this area right here. This area right here. Now, if I had seen something like this, what would I want to do? Very simple. I would have bought. Okay, I would have bought. And what happened? Price went up, but didn't really go up as I expected. When I saw it didn't really go up as I expected, something comes to my mind. Divergence, okay? Price divergence. Price divergence. Now, look at what happened. Immediately, price divergence came to my head. Price diverged before going up. Before going up. Price diverged before going up. Price divergence is just a reaction in price whereby price continues to go lower or higher and the oscillator continues to go higher or lower. So when price continues to go lower, the oscillator, which is your leading indicator, goes higher Like you can see, it was going higher, 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 and price is coming down. And for bearish divergence, it's just the opposite. So this is a bullish divergence. Bearish divergence is when price goes down, but price is still going up. So as you can see, every single time we got to the overbought region, price came all the way down to sold. We bought again, price went up to this area right here. Never got to the overbought region. I would have sold my asset right here. Selling means I would have took profit. Then we came back all the way down to what? Overbought region. I mean oversold region. Then what happened? We diverged right here. Then what? We bought again, and we would have held our trade to this region right here, which was the overbought region. Do you see how these things play out clearly on the charts? Yeah, so we've got somebody typing, Christian. Do you see how these things play out clearly on the chart? How they align with price? Exactly. See, that's the concept. Fine, they are called leading and lagging, but still it helps. Like I said in the beginning, I made mention that it was what? It helps as confluence to price. Okay, it helps as confluence to price, and that's the major thing. Helping as confluence to price, giving you the idea that okay, you should be ready to do this in the financial markets, and that's the thing. So, do we understand? We've got a question. Do we understand the concept said? Yes, sometimes it's across the 70 or 30. I like to use the 70 or 30. I'm sorry, 70 and 30, because I know when price crosses the 70 or 30, it doesn't go further beyond higher. Rather using the 80 and 20, I use the 70 and 30. That's why I said you need to wait. You need to wait for price to start showing you signals that it's coming down before you sell. Yes, we tried on a live chat. This is a live chat, so let's do what? Let me open another chart. Since everybody said they trade forex, what forex pair would you like us to use this as an example on? Okay, what forex pair would you like us to use this as an example on? Drop your thoughts in the chat box. Okay, the chat box. Okay, USD JPY. Anybody else? Anybody else? Anybody else? Anybody else? GBP USD, GBP AUD, EUR USD. Okay, anybody with USD JPY? Okay. Anybody else? USD card, USD. Everybody's making mention of USD. Okay, let's do USD. Okay. Now, first thing first, USD JPY is at the what? Overbought region. It is at the overbought region. I need to wait if I want to take a trade. I won't just take this trade. So I need to wait. I know that first thing first, I'm at the overbought region. Fine. What I need to do is to wait. Now, I can decide to go back into price and look if there was a significant support or resistance at that area. So let's check. Okay, we had resistance at that area. Remember, I said I'll be telling you guys how to apply these things with what we've learned before. So we had resistance at that area. I can mark out the resistance. We had resistance at that area. I can mark out the resistance and drag it into future price. Now, what do I need to do? I need to wait. That's the thing. I can't just sell because of price is overbought. Like I said, you need to wait and see signals that price is coming to the downside before you take such trade. So I can decide to go to the 4-hour time frame. Top-down analysis I taught you guys. I can decide to go to the 4-hour time frame and see what is price doing. So now on the 4-hour time frame, we are seeing this small bearish form. Now I can't just take a sell because of a small bearish candle is forming. I need to see two types of candle. either an inside bar candlestick or an engulfing candle. So I just need to wait at this point in time. I need to wait and confirm that, okay, price has started coming to the downside before I take a sell. And as you can see here, we were overbought here, overbought, we sold off, oversold here, we bought, we went all the way up, overbought here, we went all the way down, overbought, overbought. What do we have? Price divergence. Price kept going up, but the RSI, the oscillator kept coming down. Do we see it now? So if you trade USDJPY, I will take a shot on USDJPY. Price give me a trigger to on USD. Trading blindly, I always advise against it. Don't ever trade blindly because of you've seen it overbought, you now sold. No, you look for confluences to add to it before you take a sell. Do we understand? Now, this is the concept. This is where people get it wrong. Okay, this is where you guys get it wrong. Because Powell would make a speech doesn't mean it will affect price. You don't just decide, you react to what the market has to offer. Okay, so Powell will make a speech, fine. But what is giving you the assurance that it will affect price? Zero assurance. That's why you need to be reactive and not predictive in the market. Okay, you need to react to what the market gives you, not predict. Okay, imagine you sell now and Powell makes a speech, he breaks the resistance and start going up. What will you say? You say the market is manipulated against you, you lost money. And that's the thing, nobody is against you in the financial market. You're the one rushing to take trades. You need to be calm when you want to take trades. You don't rush. There are millions and millions and millions of opportunities to take trades in the financial market. You miss one doesn't mean you miss the remaining, and that's the thing. So Kelechi, do you understand now? Brilliant. I'm glad I changed your mindset on that. So all I need to do is to wait. So I like for everybody to chill and wait for USD JPY to take a sell. If it doesn't break the resistance, if it breaks the resistance, look for buying opportunities. Look for a break and retest. Price should come back to retest where it broke before pushing higher. Then you can take a buy. You need to keep an open mind in the financial market. Think two ways. Think on the upside potential, think on the downside potential. That's how you trade the financial market. Not rushing to take trades. It won't work that way. You'll end up losing money over and over and over and over and over again. Then you continue saying Forex is a scam, your broker is manipulated. You look for an engulfing candle. Now, let me show you what an engulfing candle is. An engulfing candle is. Let me show you what an engulfing candle is. Did you see this long bearish candle here? This long bearish candle here. Wait for the same thing to form to the downside here. Then I can look for selling opportunities, because there's an engulfing candle, which is like a signal that price has a tendency of falling. Or you could wait for a what? A evening star, right? And it's called an evening star. Yes, an evening star, which is this type of candlestick right here. Let me put it in a box for you. This type of candlestick right here. This theory type of candlestick right here that I boxed. That's what an evening star is. You can wait for that type of candlestick pattern also, or you wait for an inside bar. There is a lot of type of candlestick you could use to enter this single trade. You just need to wait for price to print those type of candlestick. Do you understand? We classify them as predictive. Okay, we classify they are predicting that price will activate. Why don't you just see price do this thing, then you take the pending order, or you place the pending order? When you see price give you that trigger, you place the pending order. I prefer to use stops than limits, like buy stops, sell stops, than buy limits, sell limits. I prefer to use those than limit orders, because stop order, it just activates immediately. Limit, you still need to wait for price to, if your ask price and your bid price doesn't cross, it activate. But stop, it is going in this direction, it will surely activate. You've seen the momentum, you've seen the triggers, you've seen everything. So do we understand how the leading indicator works now? Do we understand how the leading indicator works now? Do we? I'd love more responses, okay, before I proceed. Yeah, I'm not really a fan of pending orders. I use alerts instead, like price alerts. When price gets to a certain level I want to look at or I feel price will react to, I get an alert on my phone and I take the trade. If it gets to that level and I look at my analysis, price is still valid. The analysis and the structure is still valid. I take it, and if it's invalidated, I don't take the trade. Like I said, there is a million of trading setups in the financial market. Missing one won't make you poor. Okay, missing one won't make you miss the other ones. Missing one will make you poor. It will make you lose out on other trade. It's just missing one trade is just you learn from it. You learn from every single trade you take. Okay, Tolulope, where are you finding difficulties with understanding? Let me know. Ask your question. Just drop the question in the question section. Okay, so for you to set alerts, let me show you on the Cloud Trade platform. Okay. I'm trying to stop sharing my screen. So let me share another screen. Now, for you to set alerts, can you see my screen now? Click on this bell. So let's say we want to set an alert for USD JPY at 107.500. That's just a random level, 107.500 for a sell. Why would I keep pressing random levels? Just set alert and it places my alert for me there. So looking at I just come down here and I see my alerts and I decide to either amend the price or remove. The alert lasts for 30 days. If you place the price alert, it stays here for 30 days unless activated. When it activates, it sends you an email. I believe you receive an email that price has gotten to that level and you are good to go. So let me stop sharing that screen. So Tolulope, where are you finding difficulties with? We've not even talked about combining indicators, the moving averages and RSI together. We've not talked about them before. We've not talked about them at all. So where are you facing difficulties before I move to that? Okay, I think, okay, Tolulope is already typing. So let me share my screen back. Okay, he understands now. Brilliant. Now, how do you combine two indicators and price together? Now, what this does is to help you be more efficient with trades you want to take. Now, if this was me, seeing that price is overbought here, or let's go to the daily time frame. Okay, let's go back to the daily time frame. The daily time frame. That's where we marked out those things we were marking out. Okay, so I really wish I can be allowed to go this further into price on the 4 hour. So let's see if we are allowed to go this further into price on the 4 hour. Let's see. Okay, we can't go any more further in price, but let me just give you an example right here. I think I found one here. Or let's just go and look for one example closer to price. Let's go and look for one example closer to price. So I want you guys to tell me the example. I don't know the example we are looking for. I just want everybody on the call to tell me which of the examples should we use. Just tell me what you see an oversold or an overbought and tell me what I should be doing in that instance. Is this what you want me to check? This one? Is this what you want? I don't know if that's it. Just let me know. I don't know anything again in the markets. I want you guys to teach me so I can know you understand what I've been saying. If I mark it out correctly, just let me know. Is it this one? This one right here? Right here? And this one right here? I believe that's what you guys want me to mark out. Yes or no? Yes or no? Yes or no? I don't think the time interval at all. It can't reduce my profits at all, because when I check my emails almost every single time, because I expect important information in my emails every single time. So it doesn't affect my entry. It just gives me a more precise. It's all about precision. It's all gives me a more precise place to take my trade, a more precise entry, instead of just entering the trades. Okay, everybody has agreed that that's the tool they asked me to check. So all I need to do is go back to the 4-hour. Then on the 4 hours, I just need to go and find them where they are. Now, look at it. What do we have? We had a very, 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 very big overbought region here. Now, how do I combine this RSI with these moving averages? Very simple. Not stressful at all. Just very simple. I have seen this right here, that we are overbought. All I need to do is to wait for these moving averages to cross to the downside and also look for support and resistance zone. So this was what? Resistance. That little candle right there. It was resistance before, right? It was resistance before, yes or no? My email message can never be delayed. You're always looking for something to. When you notice you haven't gotten an email all day, won't you check your charts? You will check your charts to see if there are opportunities that come. I check my chart every 6 hours. Every 6 hour on the 6 hour. I check my chart every 6 hour. So looking at this right here, resistance, we broke through, price crossed, then we had a what? Retest, acting as support. Then what happened after? Price went down. I would have taken my trade here. Let me show you where I would have taken my trade. I would have taken my trade right here. Right there. I'd have taken a sell and look at how much I could have made. Let me see if I can show you guys the amount you could have made. Oh, sorry about that. I would have taken my trade, not there. My trade would have been right here. Let me place that properly. My trade would have been right here. So this would have made me, let's check with the trend line too. Let's check. From here to here. From here to right here. I would have made positive 8% of my trading account. Remember, we are selling, so I just changed the negative to positive. I would have made 8% of my trade. Now imagine I was trading a $10,000 account. A $10,000 account. Imagine, just imagine. Making 8% of a $10,000 account. You know what that means? That's close to like 1K or $800 plus. That's good money, right? Sweet, good money. So someone dropped the question. In the future, you've understood what happened in the past. You know what to anticipate when it happens in the future, right? You've known what has happened in the past. You know what to anticipate when it happens in the future. Simple logic. Okay? So, okay, so back to this one right here now. Look at it. This place acted as well. Resistance. Because price went all the way down. So I can now plot this right here. So what did price do? The same thing. Price came back into a target that support, moving averages crossed. I'd have taken a trade right here and look at it. Sweet buy. Sweet buy from here would have made me, let's say I even took my entry here. I'd have made 6% of my trading account. $800 plus $600. You know how much that is? That's $1.4 thousand. So just easy money. That's how I combine the two with support and resistance. Very, very easy. Very, very easy. Remember, we are always looking for the overbought and the oversold on the daily time frame. On the daily time frame. On the daily. You look for it on the daily time frame. Then you come down to the 4 hour to come and make it more precise. That is how you take trades. Now, this way you can make every single day you can place trades, like not on one currency, but you can place trade and hold the trade for a long period and make a good percentage of your trading account. So we've come to the end of this session, and you can see how well these things have been proven and they work. And we even have one we are watching on USD which I will surely take the trade if it gives me an entry trigger. And I would love for you guys to also do the same. I already gave you the criteria I'll be using to take an entry trigger. So yes, do ask your questions before we end the session. And also, if you did open an account with us, do let me know in the chat box. Okay, I'm still on the call, still waiting for your questions, your responses. Also, if you've got anything to add to the class, I'm still on here. So I'm creating a poll right now. No poll. I sent out a poll just now. Please respond to it. Did you learn something new? Did you learn something new? Did someone ask the question? Yes, I combine multiple time frame analysis with indicators and support and resistance to maximize my profits. Everything works in the market. Everything works. There is no specific time to trade. You can trade anytime of your choice. So I sent the poll. Please respond to it. With 21, I've only got 22 persons. Now 3 persons responding to it. Let's do what to respond to the polls. Thank you. You see how easy it is to make money. Your account isn't opening for practice on demo trading on our platform. Try logging in again, okay? Try logging in again. That should do the trick. So, has anybody got further questions? Please let me know before we end the session. So, before we go, let's do well to, if you haven't opened your trading account, I'll drop a link in the chat box, okay? It's all great, Augustine. It's all great. So I'll do well to drop the link to opening a trading account with us. Well to click on the link and open a trading account with us. That way you can continue to enjoy. Yes, you just need to reach out to support. You just need to reach out to support. I won't be talking about MACD. I won't be talking about MACD. I won't be talking about MACD. Yeah, everybody has my WhatsApp number. My WhatsApp number for the company, everybody has it. So you could, let me drop it in the chat box also, so you could discuss the market with me or whatever it is you want to discuss with me. Exponential moving average reacts faster than the simple moving average. That's the major difference. Okay, so we've come to the end of this session. Like I said, please do open in a trading account with us to continue enjoying this type of webinars. And yes, if you'll be funding your trading account after this webinar, that's my number in the chat box. Let me know so I can go on a one-on-one session with you, private session, one-on-one private session, where I explain these things we've talked about in detail and explain other things I use in the financial markets to you in detail. Okay, so do have a lovely day ahead of you. And like I always say, keep an open mind. Treat the financial markets like a business and see yourself excel, make a lot of profits, make a lot of money in this space. Do have a lovely day. Thank you.